Hey, what's going on, guys? Bob Mentality here. And so today I just want to talk a little bit about the idea of trading your plan. And also on the back end, we're going to talk about opportunity cost. So this is a very personal story here. I have been raging in chat about this for the past couple days, really because I'm just so annoyed that I took all this time and I set this trade up to blow it the week it would have paid off. So we're just going to jump into this. So, this is the first time this was the first major, VIX slash UVXY, volatility play that I made on the swing side. And it was a good idea, but my execution could have been a lot better. And I'll talk a little bit about some of the ideas I have on that, here in a little bit at the end of the video, but we're talking about UVXY, okay? It's a volatility ETF, basically like the fear index. It tracks the VIX. So generally speaking, when the market goes up, right, people aren't fearful. The VIX is going to go down, which means UVXY is going to go down. And when the market is going down and people are fearful, the VIX is going to go up, UVXY is going to go up. Because the stock market generally always goes up, you can see here UVXY is trending down, right? UVXY has been trending down since forever. I mean, you zoom out more, but they do a bunch of splits and stuff. It's hard to see, but you can tell it's just been going down. This is a weekly chart right here. Each candle is a week. We've been going down week on end, right? Since basically the beginning of 2018, right? Just down. Well, I knew that going into that, but I figured let me just explain. I'm stumbling over myself because I'm just so irritated about this. And now looking back, it sounds dumb, but I can see it would have paid off. Okay, so let me just stop beating around the bush. So here's what I did. Okay, go to the 1 day. So back in September of last year, in this area, I think the price was around $30 or something like that, or 35. It was up over here. On the 4th was when I went ahead and sold. We're at like $32 here. I sold, let me just zoom in. So we're looking at this part of the chart. Here we go. Yep. So right in here, I sold a put, right? I sold a put, collected premium. I'm going to total up the total premium I collected at the end of this, so don't worry about it. But I sold a put for $29.50, right? So right about here, right? I sold it for here. We were up here. Well, I got assigned on that for 500 shares. Okay. So the idea was I can just sell puts and collect premium because UVXY pays a ton of premium because it's always trending down. Everybody knows it's going to go down. So, the premiums are expensive. So I decided what I was going to do was build a position into UVXY over time if I need in stock so that I didn't have to worry about theta decay. And then when there's a volatility event where the VIX rips to the upside and UVXY rips to the upside, I can sell my shares, right? And I can have a huge position, sell my shares, make a couple grand. It'd be great. And now if you look back during that time period, I had watched, during that whole year, 2019, I had watched, boom, the VIX ripped, UVXY whipped, pulled back, ripped again, pulled back, ripped back up, pushed up, huge, sold off for a while, then back up. So this is what I was looking for. And during that time in the market, we were expecting to see it roll over a little bit more soon. So I said, it's okay if I go ahead and start in. I don't mind having like a 3 to 6 month time horizon on this. I'm going to bank when it does finally get the rip. Okay. Yes, I was right, but I messed the trade up at the end. So fast forward back to my entry there. I'll zoom back in. Sold the put, got assigned. My average is 500 shares at $29.50. It sells off here. We're on the daily chart currently. So each candle is a day. A couple days go by. I wait for, a couple months, really. I waited until November to sell again. As you can see, I'm unrealized loss, right? Because the price is decreasing, but that was fine with me. I just kept selling covered calls. And when you sell the covered call, it's going to expire out of the money because I'm selling them way up here. So I keep all the premium, so it's going to lower my average. So that was the plan, to lower my average over time. So what do? I'm selling covered calls. Then here in November on the 22nd, right? So right in here in this area, we're at about $16.50. I sold the 17 strike put, really just trying to collect a ton of premium, right, on this and average down because I didn't expect it to keep going down so far before we got the price increase, right? But if it did, it wasn't a big deal because I didn't mind adding a little bit lower. But I went ahead and sold the 17. I collected a fat chunk of premium there. And as you can see, we did keep going lower. So now that what's important for you to know is my average is now 23.25, which is that red line I set right here, 23.25. Now, that's the stock average, but it's actually lower than this. I got it down under 20 bucks. Eventually selling premium because of this isn't including the premium I collected off my covered calls. So I didn't want to sell a lot of covered calls because what would happen, and I knew this was going to happen, this is why I didn't sell. I sold covered calls between September and December. After that, I stopped, okay? I stopped selling covered calls because I knew if we did get a volatility event and I sold a call, I'd basically be capping my gains and I wouldn't be able to sell my shares on the full move, right? And make that big gain that I imagined. So I stopped selling covered calls. My stock average at this point is about $20, $20.50, right around there. So I'll go ahead and just drop this down just to give you the area, right? So that's my stock average right now, okay? Up until, well, not anymore, but up until today. So the price keeps going down, going down, going down, going down, going down. I'm okay with holding it because I know as soon as this thing is going to rip, it's, I'm going to bank. Now I had about 20 grand in this thing, okay? 25 grand in this thing. So just imagine like the opportunities I missed out with that 20 grand. Because I was holding this at a loss, I couldn't trade the $20,000 worth of stock. So it was just sitting there. And I could have been doing anything with it. No, I was just sitting there. And I wasn't selling covered calls because I didn't want to cap my gains. But as you can see, I had a couple months before we got the significant volatility event for me to profit on. So what ended up happening was held the stock. My average is right here, about $20. And then this happens, right? Markets were at, well, I'll zoom out a little bit more. Markets were at all-time highs right down in here. And then the coronavirus fears pick up. And we see the SPX drop from 3,400. We're dropping. And we got all the way up here to this 15 area. So I imagined for some reason that because back here in this time period, back in January, we had a similar coronavirus scare and the market didn't care. It bought it right back up to all-time highs. I anticipated the same was going to happen this time. That's what I thought. I thought, well, if we didn't care about coronavirus then, why should we care now? To keep things in perspective, I'll jump over to the ES here. I opened my position let me drop it down to the 20-day. I opened my position on the 24th, which was this day right here. So we had dropped from the 4,200 all the way down to down 200 points on the ES, all the way down here to the 2330s in 2 days. It was like 1,000, 2,000 points. It was huge on the Dow. We were just dropping. I anticipated a bounce. So I was going to sell the UVX or sell the covered call. And then when we get the bounce, I can either buy it back or let it expire worthless and it would lower my UVXY average. Okay. So on this day, I sold the call. Now, if you remember, because I sold the call on UVXY, I sold a 17 strike. Going back here, it just looks so stupid. Let me go back to the daily to keep it in perspective. So I sold the 17 strike call for 2 weeks out when we were on this day right here, the 24th. We were at $15. I was expecting us to we might touch 15, but we'll probably sell back down over the next 2 weeks. The market's not going to keep going down over 2 weeks. Well, it did. Okay. So because I sold the 17 strike call, that means that I collected those premiums, which was like $1,300, and it lowered my average down a little bit more. But it still means that I can't make any money over $17 because I have to let the stock get assigned at $17. Well, the next day we went to 18. The next day we went to 19. Next after that we went to 21. Then we went to 26. Then all the way up to 28. And then today we hit 38. And I had 1,000 shares at a below $20 average. So I could have made, at the top here, if I would have sold the top, I would have made about $13,000, $13,000 on this, okay? If I would have just been patient, I just would have just held out on the covered call and let the stock go for me. But during the middle of the trade, I switched my plan up. I decided to keep selling covered calls. Even though I stopped back here last year, I stopped selling covered calls. I decided to start doing it again to lower my average down. Just to be honest with you guys, I was in this thing about 6 months and I was getting bored of it, okay? I was about tired of holding this thing. And sure enough, we get the volatility event that I was waiting for, that I built I built this whole position up on, and it would have been my first 5-figure trade. I would have made $12,000, guys. $12,000. Now, I ended up losing on this, of course, because I sold the 17. It wasn't quite at my average. I ended up losing $2,540 over 6 months. So it was about $416 a month is how much it cost me to hold this trade. If I would have sold up here at the top, I would have made about $2,000 a month is what that would have paid me over 6 months. So not only did I not make $12,000, and I did lose $2,500, but I also, regarding opportunity costs, I did not make anything using that money. I was telling the guys in the room just the other day, I could have just bought deep in the money calls at the $10 strike and just held them till now, sold the calls and made 10 grand, and I would have only had to put 9 grand in them instead of $20,000. But back then, I wasn't in that mindset. I wasn't as familiar with options as I am now. So I'm just definitely a learning process. This is making more sense to me. And sure, I got out of this at a small loss of $2,500, which is not a big deal, but it's still incredibly annoying. So the reason why I'm making this whole video, of course, is for transparency's sake. But here's what I'm trying to say: trade your plan. Okay, if your goal is to average down in this thing, and after a certain point you stop, averaging down or selling covered calls, just do that and just hold out. Especially with UVXY, I had the right idea. I was a little bit early, but I jumped the gun. I sold that covered call. I sold it on the 24th, and as you can see here, I sold it expecting the market to bounce. I think everybody expected the market to bounce when we hit 3,200 right here. I sold it right here, and as you can see, we just kept going. We just kept on heading down. So very, very frustrating. I missed out on my first 5-figure trade because I was impatient by a matter. If I would have just waited one day, and we would have ripped to the 17, I would have been like, okay, let me hold out. We're going way farther down than I anticipated. And I could have just been patient, either sold a higher strike and guaranteed that I was going to make a couple grand on the trade, or just held the stock. But I got in too early, guys, and I just butchered this trade, man. It was so frustrating. It was like a waste of 6 months. The good news is I got my 20 grand back, so I can use that to trade and actually start putting that to work now, which is great. But it's definitely incredibly annoying. But I will say, $2,500 is a very cheap lesson to learn. Now I know, it's better to go with the option side, go deep in the money. And I know to keep in mind the opportunity costs and make sure that I trade my plan. So that's where we're at, guys. In the future, I will go ahead and tell you right now, I will have my revenge on the UVXY and on the VIX. Okay, I've been shredding the VIX the past couple days. I've been trading this thing mainly to the put side. Like I got puts on this day, and then sold them down here and on this day, and then I got puts today around, I think it was 46, and sold them here into the dump to the close. I couldn't get the ad because I didn't have any buying power at the time, because I was trading SPX earlier, and those options were like $5 grand a piece, man. So I'm going to get revenge. I'm telling you right now. If you look at the UVXY, it's super inflated. We could totally see $30. We could see $25 in the next 2 weeks, no doubt. And that would only require a ES bounce up to maybe 3,000, 3,100, right? We could see this thing around the $25 range. So I do plan to get revenge here on UVXY, and definitely plan on trading the VIX more. Now that I have my capital back, I'm very excited about that. But I just wanted to make this video just to show you guys that you just trade your plan. Trade your plan. Don't change it up. If you have your risk, use your risk, adhere to it. If you have your profit target, play for your profit target, trade your plan, or else you're going to end up like me, and you're going to have a 6-month-long position where you're paying $416 a month to hold this thing, and then get out just a matter of days, 3 days before you would have been huge in the money and made that 5-figure profit trade. So I think I covered everything there, guys. I'm only doing one take on this video. I just wanted to get that off my chest. So, all right, guys, remember to stay focused and develop that bot mentality, which is the trading mentality where you learn to control your emotions so you can trade like a machine. I'm out of here. Deuces.